How to improve your winning trades. So I want to talk about a trade that I took last week. It was the Swiss yen 2-hour reversal breakout trade, just a standard trade that I usually always take. Everything was going for it. Good stop loss, a level that was possible, decent reward to risk ratio with a solid take profit, and it didn't take long for the price to get to my target. And first of all, I was quite happy, I was quite satisfied with the trade overall, but I came back to the trade like 1 or 2 days later, and after that I kept coming back to it because I saw that the price would have kept going and going and going and going, and I could have made double, triple, 4 times the amount of money that I did make. And you probably know that is very frustrating, and I think this is something that we have to deal with many times as traders, and how we deal with that determines how profitable we can be over the long term. And I thought this makes for a good video lesson because I often get questions from our students, from other traders, how they can improve their trading psychology. And this is one of those examples where you really need to work on yourself, because it is very easy to make the wrong assumptions. If you see that the market and the price would have kept going and going and going, what do? First, you get very frustrated. Maybe you start chasing the price, which is very bad, because then you're not acting within the framework of your trading system. And on the next trade, you might use a wider take profit order that is not within your system at all, and then the price will not reach it. The price goes into your favor, would have hit your initial take profit, but you are getting greedy, and then the price turns around, eats up all your unrealized profits, and this is then a spiral that is not ending very well. So you need to take the right steps. And in my trading, I have a very clear, very well-defined approach how I deal with my trades. So I felt that I was getting a little bit anxious and frustrated. The first thing I did was I tried minimizing the time that I look at the Swiss yen. So I could see, okay, my trade was done, and there was nothing else to do. The price kept on going, but there was no new setup for me inside. There was new pattern building up, so I would not get a second or any trade opportunity for the next at least 1 or 2 days. That is very important. And then I closed the chart because I was not going to miss anything. And the only thing that would happen is that I would start beating myself up more and more. So reduce the screen time, not only screen time, but also reduce and try not to look at those markets that give you a hard time. I know when I started as a trader, how often do you get so personal with a specific Forex pair? I had this time and again when I took a trade and it ended in a loss, and then I started chasing price, revenge trading, and then I got very upset with this one particular Forex pair. And this is completely irrational, because obviously the Forex pair doesn't care, and it could care less about what you are feeling. So what I did then is that if I felt that I was getting too emotional with a certain Forex pair, I was just not going to look at it for a few days, and that helped remove yourself from the source of the problem. And over time you will see that, okay, it's not as bad if you not look at a certain market, if you don't get back your money right away. So tip 1. Tip 2 is that I went back to my Edgewonk trading journal. Obviously I use Edgewonk, I made it with Moritz. So I looked at my past 20-30 trades. That's what I usually do at the end of each trading week. But in this case, I went back to it, and I was looking at my past trades, and I was analyzing my take profit approach, because I want to understand, was the take profit that I used with the Swiss yen in line with my standard take profit approach? Because that's very important to build confidence in yourself and to also show that you're following your rules. So I was looking at my past trades, and I was saying, okay, the trade that I took, it was in line with my past trades. I did everything right when it comes to take profit setting. And you always need to ask yourself, could I have made something different without the benefit of hindsight? That's very important. Without the benefit of hindsight, that's the key in analyzing charts and analyzing trades, because Obviously, after the fact, it's always easy to say that, okay, I should have let the trade run longer, I should have cut my losing trade, I should have used more size because I could have made more money. But you need to look at your trades objectively. So I compared this trade to my past trades. And what I saw was, yeah, that trade was good. It was perfectly in line with all my other trades. And then I need to ask myself as well, should I change my trade management, the way I set targets for the long term? So also you look back at your past 20, 30, 40 trades and you ask yourself, for every single trade, would I have made more money if I had used a different take profit approach on all trades? Because you cannot just say, okay, I should have used a wider take profit on this one, not on this one, on this one, on this one, not on this one, because you don't know before, obviously, which trades will work out and which won't. So you need to ask yourself, okay, if I would take, generally speaking, a different approach for my trades, would I have made money overall? And if the answer is no, then you can be confident that you are following the right rules, that you are doing everything right. When we talk about trading, it is always about what's they call process-oriented mindset. I should have known that. Process-oriented mindset. Instead of the goal-oriented mindset. Goal-oriented people, they always look just at the outcome. Was it a winning trade? Yes, good. Was it a losing trade? I must have done something wrong. That's not good, because in trading, obviously, even though you do everything right, you can end up with a losing trade. Even if you screw up, you can end up with a winning trade. So process-oriented thinking is important. And then ask yourself, did you follow your rules? Yes. Could I have done something better? No. And then you just keep on going to the next trade and to the next trade. And if you have a trading journal, which you hopefully have, then the trading journal will act as a reminder, because just ask yourself, do you remember your last 5, 10, 20 trades by heart, just on the top of your mind? I certainly don't. So it is very, very reassuring, and you don't need to have edge wrong. This is not going to be a promotion. You can also just start collecting screenshots of your past trades and then go through them one by one, and you will start seeing similarities. You will start seeing patterns, not only in your trading, but also in how the market moves. And then you can make better decisions over time. So long story short, if you feel that something is coming up in you, if you feel that you're on the edge of making a bad trading decision, then step back, regroup, start objectively looking at your trades, and then you can make better trading decisions going forward.